When I discovered Bitcoin, I said, this is digital gold on a big tech network. And so not only was it a solution to the corporate treasury problem that every company has, but it's a solution to every individual, family, or institutional treasury issue. And the fact that it was a big tech network, an open monetary protocol, meant that it was the next cool chapter of the mobile wave. So I mean, I had a lot of passion for digital books and digital education and digital maps. And when I saw digital property, I thought this is the next big thing. So then we just got drawn into it, right? And first we did a $250 million purchase. Then we did a Dutch auction, and our shareholders left us with $175 million more dollars. So I didn't know I'd have the $175 million after the first $250 million. I didn't know that until 20 days after the Dutch auction was announced. So after we had that, we did the second purchase. Then the stock traded up. We ended up with a lot more money. The business was doing great. So we did a third purchase. Then we went to the bond market and we offered $400 million in convertible bonds. And the company stock was trading at the high for 10 years, $300. And we did the bond offering, and then it was upsized because there was a lot of demand. So then we did a $650 million purchase. And then Bitcoin marched up. I think we did that at 20,000, and Bitcoin went up and our stock went up. And then pretty soon we were trading at like eight times what we had been at 4 months ago. So we were able to do another financing, and we did a $1 billion purchase. So then after that, we were able to do a $500 million debt offering at 6.125% interest. When the dust settled, we had raised $2.2 billion in debt. And through the Dutch auction process, we had another 400 million in equity plus another 100 million. So we found a way. We found like 2.8 or 2.9 billion dollars we didn't know we would have, and the debt was borrowed about 1.5% interest rate. So if I had put out a press release in June saying I want to borrow $2.2 billion for 1% interest to buy Bitcoin, that wouldn't have happened, right?
Right.
If I had gone to the board and said, that's what I want to do, they would have said, you're crazy. That's not going to happen. So we kind of worked our way into this because of a fortunate set of events, a lot of macroeconomic tailwinds blowing in our favor. And then every time we had an opportunity, we seized the opportunity. So fortune favors the bold, right?
It does. And you did mention the macro side of things that I do want to get into. In recent interviews that you have done, it's been brought up that monetary inflation in the Western world has averaged out to around 7% per year. Obviously, in countries like Venezuela and Argentina, much higher. As I understand it, your macro outlook heavily played a part in your original decision to purchase Bitcoin 12 months ago. I wanted to get what your updated macro outlook is over the next 5 to 10 years. What is sort of your expectation of inflation numbers that we'll see? And do you think the US is sort of headed towards hyperinflation?
I think from 2010 to 2020, it was clocking about 7% in the US dollar, and all of the currencies that kind of pegged to the dollar, about 7% monetary inflation a year. I think it tripled from March 2020 to March 2021, at least. There's debate. We could debate whether it's 20% or 30%, but the S&P 500 was up 38% year over year from where we're sitting today, but I suppose it tripled. And now if I look out, I can't see any reasonable forecast where it isn't at least double. It isn't 15%. So my forecast is maybe it's not as extremely expansionary as it was from March until today. Not over the last 15 months have been pretty aggressive, but I think it'll continue much more than 7%. So if I had to make a forecast, I would say 15% for the next 4 years.
Right.
And then maybe it'll taper.
So about double. I would love to get your response to, I've seen Fed officials sort of in the last few months have called the high inflation numbers that we've seen over the last few months. They've called it transitory, or they're inferring that it will be in any way short-lived. What's sort of your response to that? And do you think it's irresponsible to be making comments like that? Or how do you respond to those, that sort of notion?
I think inflation is a vector, and so it's not one number, it's not a scalar, and you can't use arithmetic. If you want to be simplistic, you say inflation is CPI or PCE, and it's one number, and we were targeting 2%, and now it's 4 or 5. But that's not the way I think it is. I think it's an n-dimensional vector. So, for example, I think the inflation rate in single-family homes in the U.S. is 25%. I think inflation rate in equity was 38%. The S&P 500 index is up 38%. The cost of buying a share of stock in a company is 38% higher. So if you look at asset inflation, Bitcoin's up 270%, NASDAQ is up 40-something%. There's no inflation in gold, that's flat. Real estate's up 20% or more. You know, you can find a market basket of things called CPI that are only up 5%, and you can say that's transitory. It's irrelevant whether it's transitory or not. If I keep track of a list of things that you don't want to buy, and I tell you that the price hasn't gone up, what does it matter whether the price went up or not? The question is, what do you want to buy, and what prices are going up? And I think the price is going up at a different rate every month in every different place in the world and every different cohort for 1,000 different products, services, and assets. And, you know, that if you understand that, then the best surrogate for an investor is the monetary inflation rate. And the monetary inflation rate is somewhere between the M2 money supply expansion and the S&P index. Take the S&P index, 38%, it's up, and then subtract 3% risk premium. And you could say there's a 35% risk-free hurdle rate. That was the rate at which the currency devalued, right? The dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So you know, and it was when it was going up 10% a year, it was inflating at 7%. I think the money supply expands at 7%. You tack on a 3% risk premium, that gets you 10%. That's normal. And we're like triple normal, depending upon, you know, what your reference point is. And if you're taking monthly averages or quarterly averages or daily averages.